Ladies and gentlemen of the crypto space, we're live on Wednesday, June 25th at 11:40 a.m. and market looks good. Does it not? I mean, look at that line, 107.143. This is basically all-time high region. Now, obviously, all-time high was what, like 111, 112. Whoopie frickin' do. You're talking about maybe a level on the 10 SMA and the daily is about 99. So between 100 and 110, talking about a 10% range. 11, 12%, whatever. Whoopie do. This is a heck of a range right here. We got to put boxes on it, like little red boxes or little green boxes. So folks have a particular feeling, a particular sentiment. How does it make people feel? Are people scared? Are people excited? Are people, I don't know, are they scared? So the whole point of these things that I'm saying is should be none of them. Is what it is. Quite reasonable. When things are reasonable, there's no reason to have an emotional response. It's not like there's something crazy going on and the market is melting up. Look at that. Check that out. Should we not be afraid if the market is melting up? If Bitcoin's ripping to 125, 135, 150, doesn't that say something wrong with the global financial system? Now that's something that most people don't understand when they're getting into investing. Something's fucking broken if Bitcoin's ripping to $150,000, 175, especially if it happens quick. It's the same thing when you have like bond yields collapse, like a 10-year yield collapse from 6-month chart. Like a 10-year yield collapse from what? 1.85% to 0.32% in a 6-month period. It's the same thing. Or when gold does something like this parabolic rise from 1900 to 3300, it's the same thing. There's something breaking. But is breaking something to be afraid of, or is it something to be understood? How do you respond to these things is ultimately the measure of you. What's the difference between people? There is no difference between people other than how people respond to things. Are they rational? Are they calm? Or are they frantic and paranoid and emotional? All of that is noise. All that matters is the 3 rules. And the measure of who you are is how well you execute your rules. And the measure of your success, how well you execute those rules, and nothing else matters. The reason that's so elegant is because it's simple. It's simple as everything in life. Everyone complains when something's complicated, so why not make it simple? Why not have simple rules? Then you don't have to worry about complaining. You don't have to worry about the noise. You don't have to worry about, and when I say emotion, I mean the emotional people out there that are plagued with these things called human emotion. Obviously, emotions have their place, your family, friends, whatnot, and other shit in existence, like, empathy and whatnot for other people. But emotions have no business in capital management. Emotions have no business in the decision-making process. only rationality does, or that's all that matters in my opinion. How rational one can be. I guess that's always a challenge. We're never really truly rational because we are humans, and humans are emotional creatures, so we're always blinded and got this hazy, foggy shit always around us that's messing up our path. So your job and your goal is to attempt to navigate and find that sweet spot. Maximum rationality. Anyway, the market was nice. And when you wake up and the market's nice, that's comforting. Bitcoin and the 6-month chart looks good. Does this not look good? Do folks look at shorter time frames? Oh, that's why people are emotional, because they look at shorter time frames. They look at this monthly chart, which still looks glorious. In fact, didn't we close at a monthly all-time high? I think it was. No, we didn't. Or a candle was. Last month was a monthly wick. It was higher than earlier this year. We did break all-time high briefly. We closed on the daily at all-time high back on May 19th. Not bad. It was only a couple of weeks ago. Mid-daily. Is there anything more recent? Yeah, that was there. Still May 22nd. Was the highest daily close. So we literally just had an all-time high. Literally just had an all-time high. And what's the sentiment out there? The sentiment out there is like, it's over? And when I come in and I see all this shit up to me, I'm like, what's over? This looks great. So I'm very often at a loss for words of how to describe the behavior and demeanor and opinion, and there's shit that comes out of people's mouths. I can't explain it in any other way other than rational. It does make sense to me. It makes sense to me because I understand that I continue to spend a lot of effort to not have these emotional responses. I understand why people do what they do. I understand why people think the way they think. But the bottom line is they're wrong. And they're only going to do themselves a disservice. And the sad reality for humanity is that the majority are always wrong. They always will be wrong. That's just the truth of humanity. Anywho, Arrow 81 cents, Bello 4.5. Spell, good old cash flow, down at 4523. Not horrible. Wouldn't mind seeing that pick up a little bit. Curve 54, it's up at 58.59. Earlier this morning, was it? Not bad. Above the daily 100. We just had our interactions with the daily 100. Nice tweezy bottoms. Let's see what this does. And it's really the daily. Like, watch. This closes on the daily above the daily 200. It's like, all right, this chart looks decent. It's obviously on the defensive. You got rolling tops, lower highs. What are you going to draw a symmetric triangle off this shit? I mean, you're probably going to see this on social media somewhere. You're probably going to see someone draw something like this. And it's just such a waste of time and effort. I'm going to draw something like this and be like, oh, there's a symmetrical triangle. Or it's a bearish triangle because you're at support and you got... I hate trends. I used to look at trend structures. I used to look at triangles. I mean, like an ascending triangle. Fine. I'll look at an ascending triangle because that's basically a ceiling. It's not even a triangle. It's just literally you're hammering a ceiling, and it's self-pressure getting Um, uh, it's the consumption of cell pressure. The bid goes into the cell pressure. You get to the ceiling, the resistance. They dump it. You buy into it, and you got higher lows along the way. So that's actually a really nice trend structure. But when you have a symmetrical triangle like this, I don't give a crap about lines that people could put in their chart. 97.9. Huh. Notice there's one thing that I saw right away 2 days ago. Look at that. Look at that little gap action. Bloop, bloop. Hello. Gap me once, shame on you. Gap me twice. No, I don't know, something like that. But that is interesting. Look where we are. Yeah, just a little bit lower. Moves at 92. We saw emerging market debt get bid and 10-year debt. It's not that bad. I mean, you could easily see the start of a strong bull market with the DXY trending towards 95. Move finally breaking the 80 to the downside and the 10-year trending towards 4. I mean, it's not the absolute values that matter. That's where folks get hung up. What matters is the delta and directionality, because that is what tells people sentiment and gives people a capacity to speculate on where things will be over a duration of time. That allows people to plan, and that allows people to bet. Exactly what futures and options are, factoring time into price. So if you got move falling through 80, all right, there you go. The 10-year gets bid to like 410, 415, whoopee do. And you got weakness in the DXY, you're like at 97, 217, 96.9, and that's going to bid the market hard. Is there music playing in the background? What the hell? Oh shit, there is. Sorry, I guess I clicked the button. I didn't mean to. I had dance pop in the background. Sorry. Good morning, Cap, Gabriel, Arrow. I wish you were also on Twitter chat with Curve and Aerodrome about tokenomics. Listen, the Curve take on tokenomics is that voter escrow superior to buybacks. Which is better, Curve or V33? I mean, the biggest takeaway from V33 is that that VE33 was the biggest component of what he built was solidly. It was just an evolutionary step on top of voter escrow. It's the consolidation of bid and ask pressures. You need the emissions to drive incentives, which drives behavior, but you need to disrupt that increasing supply. Otherwise, you get a constant depreciative pressure. So the VE33s do that nicely, and nothing does it better right now in all of crypto than Aerodrome. Especially with Flight School, that's a hell of a bid. Like that literally takes the hot air even out of the aftermarket NFTs. Because you're talking about as of right now, Flight School this week is where this month's going to be 50%, give or take. And if you factor in a voter VE Aero Maxi, 25%. I mean, that is a massive discount on NFTs. So I don't know how anything is moving on Vexy unless you're buying NFTs less than 2,500. The small actors, that's all the discount they're going to get. But if you're buying anything above 2,500, you might as well buy in the market. So that means there's a constant bid, and that's just not a bid because of the cash flow and the voting. There's a bid on the discount from the NFT that Aerodrome has to build their reserve for flight school. So the best part, that reserve gets distributed and it never even enters the market because it's distributed to locked NFTs. So this is a really good game theory that they did, and Aerodrome nailed it. It just has the volume compared to Velodrome. I still like Velodrome better for all the right reasons. It just doesn't have as much traction. You know, Base is an optimistic superchain. Strange how things played out. You think somehow, well, there's no way to really get them. I mean, literally, it's an optimistic superchain, and it's the only implementation that's outside the scope of Velodrome. It's just so weird how things played out in some regards. Listen, you guys know what I'll say about Curve versus V33 is that the only reason voter escrow from a Curve perspective works is because of the Curve Federation, and we don't really talk about that much recently. But that's a good part of our talking points over the last years that we've been doing these conversations. Federation's everything, the coming online of Convex to soak up excess supply. That was all needed. And then you have your partners that are accumulating large um, B curve positions to so they can vote on gauge weights that serve their interest. That's the whole point. That's and voter escrow became what it was meant to become, but all these opt-in participants allowed it to become what it was probably going to become faster than it would have taken organically and at a higher price than it would have taken organically. And there is reason to speculate that it may not have matured into something stable organically because price can invalidate um, the viability of uh, of something that would have been. So it worked out the way it worked out because the circumstances were there. Plenty of reasons why Curve could have not worked out from a tokenomics model standpoint. It's funny how things play out sometimes. And sometimes, things survive because they're chosen to survive. And that's really my 2 cents about Curve Federation. It has chosen a market to continue to exist and have these higher lows that we see. It's clear. It's 55 cents. You're above the 100 SMA on the daily. You got higher lows compared to the most previous inverted head and shoulders. You have a compound inverted head and shoulders, and this is what I see in the chart. Other people look at different shit. This is what I look at. I don't see that stupid symmetric triangle. I like the way this looks. This breaks the 100 SMA to the downside, and we start pushing towards, the neckline or even lower the head on the small inverted head and shoulders. All right, fine. Then things are uncomfortable. But that doesn't do anything because when you engage with this particular protocol, it's an ownership position, so it's irrelevant. So that's not something to even think about. Oh, it's not doing good. Whoopie do. What are you going to do about it? Serenity. Can't do anything about it. Doesn't matter. So that's my 2 cents on the topic. There's not much to. It's a fun combo. There's not much to debate. So the way I think about it is, um, you have two different protocols with two different product market fits, two different networks. I mean, Aerodrome has no liability printing. All they have is liquidity financing, which is great. That's a big deal. Clearly, it's foreign exchange. They have no credit. There's no real derivative. Not really. Not the way the Curve Federation has derivative. It's not there. Um, so Aerodrome is not the five businesses of crypto. It's only two. So that's a takeaway, and that's okay. Businesses overlap all the time. Look at Target versus Walmart. Pretty sure they overlap. And that's Sam's Club versus um, Costco or BJ's. Pretty sure they overlap. So my 2 cents. And yes, I confirm you were not hearing things. So that's a good thing. Don't worry about that. playing while I tune in. Good morning, Cap. That was me. The no, wait, you guys don't like that music? It was dance. That was good music. Mix, mix. Much a pleasure. Emotional theme tunes. Have you looked into yield bases? Yeah, it's a big deal. Probably something I pay attention to once speculative narrative settles. What from like you eager to invest in something new? Of everything I've talked about over the years, of all the stories I've told you folks, when you see something new, let's break down the psychology of what you said. No, you should pay attention right now. It's a very exciting piece of software that Michael has built. Yet again, what does that mean? Is it something to get excited about? No. Is it something to be interested in? Of course. And that's as simple as I could possibly put it. Certainly pay attention now. Uh, with speculative narratives, you should always disregard speculative narratives. What matters is actuality. Um, Now, will there be so tokenomics are pertinent. I believe there's going to be a new token for yield basis, and that's clearly going to drive an incentive system, much like Michael originally conceived with the CRV token. So maybe he's got something interesting up his sleeve, but that's irrelevant with regard to time and market. It's irrelevant with regard to supply and emissions curves because disinflationary emission schedules take time for the disinflation to kick in. And when I say time for the disinflation to kick in, it might take years. Now, B33 clearly worked out a little bit differently. Those seem to have stabilized into horizontal trends relatively quickly. Where's resupply at? Well, there's your emissions. And this has probably one of the strongest recyclers, recycling components that we've seen of late. And that's a big deal. It's done relatively well. A-mill market cap, um, but emissions always catch up, increasing supply. It's not the same dilution as dumping on, boomer meme coin shareholders, but it is increasing supply no less because it's financing incentives. And incentives control behavior. So, I still think you want to catch these types of investments after they stabilize and you get a sense of time and market. So let's take a look at Aerodrome, for instance. I watch this. Or even Velodrome. Look at the horizontal nature of these charts. Up, down, horizontal, horizontal, horizontal. And then you go back, go here, and we go to Aero. Last 5% of the day. Nice horizontal. Same horizontal. So what? You come back and arse up. In the next 2 years, it'll be up, down, until you finally you'll probably get legged. And that was my 2 cents. That was my something I speculated. It's not really we don't have any indication that it's actually the case, but maybe we see something like this over the coming years and you get like legs and channels, you know, break here and then you get a nice trying to draw and it's moving. You get a nice rip to the upside and then you get and then it and then you're stuck in this channel. It's not so necessarily a bad thing. It's a new channel. So you get this double up effect. And that's what we see across all the B33s, more or less, at least the ones that have a decent bid, horizontal price action. I'm very curious how this plays out, but we've talked about this arrow. We've talked about what the V33s will look like in 2, 3 years from now after a solid cycle in the next bear market because you don't know what's going to come of these businesses and these assets, their associated tokens, until they've gone through the full bear treatment, which is clearly like liquidation cascades and maximum depreciative pressure. Now, what's one of the few assets that has experienced that? It's clearly Curve. Curve stands on its own in all of crypto as it touches on the five businesses of crypto. There's nothing else in all of crypto that touches on the five businesses of crypto. So the point is, John, with regard to yield basis, is that not part of the Curve Federation? That's going to improve the and deposit interest in Curve from a foreign exchange perspective. It's going to probably tap into CRV-USD to facilitate the leverage component of yield basis. So that's cool. Uh, so all of this plays in. It, so Curve has the infrastructure to facilitate the concept of yield basis. It's just remarkable how Curve and team, and obviously Michael at the head from an idea perspective, uh, has used established components of this infrastructure to continue to iterate and build out new components. I very much look forward to seeing what it does and how the market accepts it. Thoughts on Curve BTC? Curve really hasn't moved with the recent up move in Bitcoin. Odd. Oh no. Odd, strange, interesting, exciting. These are all buzzwords. It's not part of what people really need to be thinking. People need to be thinking about, do you have enough cash? If you have excess cash, do you buy something? And restraining oneself from buying things, whether it's a car or something at Best Buy or an investment, it's the same exact thing. And that I think about that all the time because for instance, I'll get off of the stream and I'll stop on Amazon and I restrain myself from buying some things. Or I wouldn't mind an updated car. I haven't had an updated car in 3 years, and most people are on 3 year cycles, but I'm restraining myself. And what investments? I did take the aerodrome investment, but there's always more to buy. Isn't that what you just said recently, Aaron? I wish I had more. So how does one restrain themselves from doing the things they think they should be doing? And this always reminds me, and I'm literally focusing on one word in your statement, odd. Not odd. Nothing's odd. This is all just is. And the important perspective to have on what is there's no response to be had. It's a very philosophical concept. We choose to respond to events and information. You don't have to. There's more important things to focus on and focus on health and well-being and sit in the sauna and clear your mind and meditate and stuff like that. And then when you encounter external information, you're in a better position to respond to it without drawing premature conclusions or taking decisions that are making decisions that are emotional. I don't think anything is odd about what's going on. I think everything is quite reasonable. We are at 107. I'm sure everyone was afraid when what went down over the weekend with Iran went down and it was at 99 and everyone's got all this emotional shit. That's everyone's problem. It's not the price action. It's not, it's just people are too emotional. It's so much harder to just let time pass, but that is really the goal that people need to find how to let that happen or how to be able to tolerate that reality. That's the path to success. It's time, but everyone's head and emotions get in the way of letting time pass. Curve F looks good, looks bad. We you're not going to know anything about what this market is going to look like until there's another $200 billion in the market. Check back when there's another 200 billion. I mean, literally, we have the Treasury Secretary saying there's going to be a couple $1 trillion floating around, circulating, creating velocity, creating credit and leverage and primitives and liability expansion, liability being currency units, primarily being dollars. And we're talking about what looks good and bad now. It's irrelevant. When you see $1 trillion in this market, it's completely different. So just remember that when you're starting to react to whatever current events are or headlines are. The United States says more stable coins. That's baked in the cake. I did much better. Mix. So excited about the new Vibrant decks coming to Linnea. Not excited about new dexes. Nile's already there. Does everything I potentially need it to do, and Consensus already bought into Nile. I don't really like new. I don't see much of a difference between Curve and V33. It just comes down to emissions versus demand. We see after the bear market, which made it, yes, they're all going to have FUD, and all that matters is survival. And there's going to be differences. And look, the difference is clear. V33 stands on its own, whereas Curve requires an entire federation of external actors to opt in to creating sustainability of its emissions. Now, frankly, Curve's post critical emissions because the whole Dow and everything that was vesting is all cleared out. And in August, don't we have an emissions cut? What are we, month and a half, give or take? Is it August something, August 11th? Maybe it's a month and a half from now. So that's what Curve needed help with, getting past its initial vesting and this initial its adolescence. The V3Cs, I think, will be very interesting as the emissions start to come down. Years, years. I like how you referenced 2021, 2022, though. Very important, good for you. I look forward to 2026, 27, 28, 29, 30. People look at these markets with such short time frames. They literally call 2020 and 2021 dino coins. I don't get it. Well, I do get it. The majority will never understand a truly broad, zoomed out, 1,000-foot view perspective. Now, obviously, that is literally the title of today's stream, the 1,000-foot view. Everything is noise today. Everything is noise for the next week. Everything is noise until the end of the year. Everything is noise. Check back in 2028, 2030, and you'll get some answers. Check back in 2 years, 2 year increments. So, how do you factor that into a capital management philosophy or methodology? The three rules. Rule number one, own more assets. Rule number two, know when to stop buying assets. Rule number three, fuck you, pay me. So, I'm going to check back. Probably want to buy some things between now and the coming years. Okay, rule number two, you probably don't want to pay a premium. Probably want to make sure you're not overpaying for stuff that you're buying. Pretty simple. And the only way you're going to be able to execute rule number one is if you've adhered to rule number three, where the primary attribute of the assets are that they pay you, so that you actually have cash to execute rule number one. own more assets. Hope that helps. Good points, as always. Good morning. Good morning. Good morning. Any thoughts on Sonic and why metrics are what they are over there? Yeah, because people are interested in other things. They have 2-second attention spans and increasing token supply, incentives, dilution. Um, wasn't this inevitable? I think the technology is great. I think if anything, Andre um, has what it takes to build a successful ecosystem. So I think Sonic will be very good in the future. I have actually a higher opinion of Sonic than Phantom. Phantom was the first real secondary chain. I mean, other than like, but if you recall when Curve first branched off to off chain, it was to Phantom. And there was literally no capacity to move capital. There was no liquidity. I mean, this was like early 2021. Um, given the history, though, Sonic appears to be functioning extremely well. What do you see, Where do you see crypto adoption in a decade? Now you're talking. Will we live in a future where almost every institution accepts crypto payments? No, it's irrelevant. Too far. Decades too far. What's pertinent is we need a capacity to offload a tremendous amount of treasuries. The government's forcing everyone to back stablecoins with treasuries, at least domestically in the United States. You know, Tether's a different ballgame. They're an international organization. So they have a more diversified portfolio. Um, this is going to flood the global financial system with stablecoins. Now, if you build it, they will come. Meaning, if you have a couple $1 trillion that land in stablecoin land, now all of a sudden businesses have a capacity to have different options and choices because it's available. Businesses. There's only what $250 billion worth of stablecoins. That's not going to do shit. And in fact, a lot of people won't deal with them because there's just not enough supply. So when there's an increase in supply, there'll be an increase in consumption. That's the way currency works. More supply, more consumption, which is maybe um, ironic or contradictory in the way people think. You would think if there was more supply, people won't be using it as much because it gets diluted or the potential to consume it gets diluted. No, it's the opposite. So in the decade, too far, too far. I agree with Rao. I don't see really past the horizon in 2030. That's like the AI horizon, AI robotics horizon. We're already starting to see it. One interesting takeaway a couple of folks would appreciate is for a long time I used to say software engineering was a like a dry sponge, a completely unsaturated market. That's not the case anymore. This is the first time really that I see it in my entire career where um, there's no entry level. I mean, who wants an entry level engineer? You need an engineer that's going to sit down and be able to do all the work. Just do it. So you pay twice as much compared to entry level. You get one engineer instead of three. So things are going to get weird. So we just talked about post 2030. So between now and 2030, it's probably where my mindset is at. It's it's your last chance to own parts of critical financial infrastructure, or at least the infrastructure that's potentially going to be used by the system for the future, at least the immediate future. Um, these are the only investments I potentially see. Hmm. This is the most exciting infrastructure, the most exciting investments. I mean, what are you going to buy? Circle? What's the dividend rate? It went up tenfold. All right, it went up tenfold. Did you sell it? Did you buy 100 grand and you sold it for a mil? Good, you're done. You did good. Most people didn't do that. Most people can't do that. Most people have no idea how to do that. Okay? So that's not a sustainable capital management methodology. And it's a stupid instrument, CRCL. It does nothing for rational capital managers. Very simple philosophy that I have. I just want to buy stuff. right? Doesn't that make sense? Rule number one, buy more assets. I just want to buy things. Charlie Munger said he didn't know how to sell. I agree with that. I don't like to sell. I'm pretty sure most people suck at selling because otherwise people would have come out of 2021 with a lot more money and a lot less horror stories, financial horror stories. So pretty much everyone sucks at selling. So what I wanted to do when I started, really writing down my rules, how do I factor that into the equation? Great. I don't need to sell. I want to buy things that I don't have to sell. And I don't need everything that I buy to work. I don't need everything that I buy to succeed. I just need 51% casino odds. I need the majority of what I buy to succeed. Therefore, I need to make good choices. And therefore, I need to buy more assets over time. So I don't care about the word adoption. I don't like that word adoption. People will use what serves their best interest. Oh, I want to own what people are going to want to use. I don't really think about the word adoption. Ooh, it's a buzzword. So what I want to own is I want to own five businesses. What do you do in life when you go to school to get a job, work for a business? Okay, so you own a business, own a business. So that was the whole rationale there. So there's five businesses in crypto, and you can't own these businesses in traditional finance. They don't exist. They don't exist where you can buy them. The banks own them. Well, they are the banks, but you can't buy them. But in crypto, you can. So that's it. This is very simple. Execute rule number one against the five businesses of crypto because traditional finance doesn't allow us to buy this shit in traditional. And the Treasury Secretary of the United States says these five businesses in crypto are going to have 10 times the amount of currency flowing through them in a couple of years. How about that? That's a pretty simple investment thesis. Good morning, Cap. Much pleasure. That's why I cash out weekly so I don't get tempted to add. Don't add but cash. You don't want to add. You have to. There's a sixth sense. I don't know how to describe it. It's about position size. It's about portfolio composition. There's a feeling, and it's kind of like being a painter or an artist or sculptor. Got to have a nose like a chef. When you look at your portfolio, are you comfortable with a position size? Do you have enough? Can you afford a good position size? And how often have I said it? If you can't afford an appropriate position size, you invalidate a position. You don't get it because you don't have enough money. And you concentrate on the things that you can afford, such that the composition of your portfolio feels right, smells right. Need to cure that temptation to add more because you probably shouldn't be. You have a position and you should be comfortable and happy with what you bought. It's a decision. That's a big thing. That's something to be proud of. You made a choice to invest. Something to be proud of. Most people don't do shit in their lives, and most people certainly don't invest. That's something to be proud of. And that's an interesting statement. I guess most people don't say that, but I do. New Dex will be a migration from VE Nile. Okay, cool. Migration. As in Nile is transforming into a new Dex? Okay. Nile is migrating to this new Vibrant Dex cap. It's also going to be built by Kingdom. Okay, listen, I don't keep up with everything, but I like what both of you said. So I'm like, double thumbs up. Go get him, Nile. Go get him, Vibrant Dex. Papa needs a new pair of shoes. Sounds good. Make more of an AX. Oh, they want something like um, Shadow, which is done well. Catching you live, athletic concept, much a pleasure, but heavily incentivized by consensus, which is good. There's your Kraken. There's your Coinbase, Kraken and Inc. Consensus and Linnea. I like it. That's a big deal. Rule one, rule number three, you know the deal. We've talked about these rules for quite some time. So many people on social media, on X, they don't know about the rules. I do this stream 2, 3 times a week. Just gonna try and do it two, maybe not down to one, but two. And all these folks on X, all they have to do is click it and hear about the rules. And there's 150 people live on the stream. It's 20,000 subscribers on X. Nobody watches my content. Relatively nobody. Obviously, I know you guys are somebody. But the point is, it's strange. Strange how people think I don't know what they're thinking on X. Why follow if you're not going to just click and listen to some words? Because I've done polls. Let's look at those polls. I've done some interesting polls lately. Check this out. This is a cute one. Not really relevant to crypto, though. This was an interesting psychology. Knowing the socialist programs, we have socialism in the United States with just Social Security. It's literally called Social Security, and Medicare, Medicaid, and food stamp, and EBT, and stuff like that. These are socialist programs, like parts, components of socialism. It is what it is. So, and this is a gauge of people's psychology and sentiment. Would you rather pay to finance the socialist program or pay a lawyer to avoid the tax? Now, tax avoidance is completely fine. There's nothing wrong with tax avoidance. Strategically using the tax code and the laws to avoid paying uh, what would be a liability. It's just not because you're taking advantage of a deduction or some sort of structured organization that has a variety of structural benefits. Okay, so the point is the majority would rather pay a lawyer to not pay the tax because have a sentiment about the socialist program. They're giving their money to somebody else and they don't like that. So I find this a very interesting poll. So it looks like a lot of people, the majority, are not content with the socialization of their money that they made to other people, but not on your behalf, or rather, not by your discretion. It's not your choice. It's chosen by somebody else, the powers that be. There's a very interesting philosophy and psychology to this post. This is a cute one. You guys remember Dancing Baby? Am I that old? This was a big deal. This was crazy tech back then. We didn't have anything like this, and it was viral. This Dancing Baby. Where's the other polls? I had one other poll, didn't I? I had another poll. Yeah. What if crypto claim button? Yeah, everyone forgot about this. This was such a big topic for me. What if crypto claim buttons are distributions of unrealized property with a basis of fair market value argued to be set at the time of receipt, best case, or reasonably close to fair market value at worst case? This didn't get any traction. 14 votes. What a shame. But this is also why nobody cares about, or even the regulators don't give a crap about my documentation and my business structure because nobody does it because it's not easy and it's complicated. So actually, it is what it is. I always wish somebody or folks would take interest in the work I did, but everyone continues to kind of be indifferent about it. So, do you know how to argue that position? Yes, very much so. And then folks are like, one person said yes, and then folks said why? Why? This fair market value. It means there's no tax liability. And there that goes back to that other poll we did. And pain is preferred. Why would who says that? All right. Anyway. Anywho, can you demo flight school steps? There is no flight school steps. It's you go to Arrow and you go to lock and you lock. You create a new lock, create lock. You deposit your Arrow, then you go to VE Arrow Maxi and you press deposit. There, you just maximize your bonus, dude. Easy peasy. Now, the reason that's the case is you go to flight school and you'll see up here in the right hand corner, tells you all the information you need to know. VE Aero Maxi Relay 1.25x boost, which is 25% boost. Boosties! There are several ways to increase your share of the bonus pool. The following boosts apply to VE Aero locks and their weighted value, not the bonus itself. Weighted value. So if you buy 100,000 the Aero, your weighted value is 125,000 Aero. And then you get paid 48% on that weighted value. Weighted value. A little bit of semantics that are a little off here. It's like, all right, 1.3 for Coinbase One members. Great. On compounded amount, I would imagine. It's weighted value. So this isn't the clearest or most consistent language. Yeah, I got rid of the music. About that one. How else to classify who you own other than through the adoption title? Uh, what matters is how much you're getting paid weekly. That and clearly, if you're getting paid more, people are using the stuff more. But what's more important, and what's really only important, is how much you're getting paid weekly. And you can only really assess that over time, though. So you guys, and you know, Arrow, that I've been doing accounting since back in 22. So I got 22, 23, 24, now 25. I'm going on 4 years of accounting now. If the at the end of this year, 25 is greater than 24, uh, okay, I made the right choices. The amount of revenue I made in 2023 was greater than 2022. The amount of revenue I made in 2024 was greater than 2023. I expect the revenue I make in 2025 will be greater than 2024. That nothing else matters. Everything else is no. I don't, and that's kind of the story I try and tell, and I don't know how to best tell it. The whole point of this stream is for me to get better and better at telling that story. How much noise is out there? Crazy. Yeah, the cat. Much a pleasure. Much a pleasure. Always a good day. Get to talk about what's going on out there in the real world. Let's look at some numbers before we close out the stream for the day. 107.4. That's a hell of a number for Bitcoin. Anyway, 55 on Curve, 81 on Arrow, 10 year at 431, move 92 DXY. I want to see this. I want to see this break that lower low. I want to see 97.5. Yeah. All right, DXY. It's all up to you. But frankly, once you start to see cryptos go up and the DXY go down, now you finally made it to where uh, favorable market conditions live. Once the dollar starts rolling, then move or roll over, and then you get to see what crypto does back in 21, really. Because 21 it was weird. 2020 was just that was just firecrackers, but 22 was some serious M80s and pineapples and whatnot, whatever those were called back in the day. Those fireworks. I live in Florida now. You can literally go to the store and get fireworks, unlike a lot of states, these socialist states in this country. Wednesday, June 25th, 12:34 p.m. Thank you all for joining me today. It's always a pleasure. I appreciate you guys. 164 people made it to the end of the stream and are now that much more rational because of it. Stay calm, cool, collected. Wednesday, I'll make it to you Friday. Probably gonna take a couple of weeks, but until then, I'll see you later this week. So it's all good. Between now and then, be well. Peace.